Hello again. Right, back to normal service, normal internet connectivity, so I can upload videos and whatnot because I'm not on holiday anymore. So Thursday and Friday's trades. Just thought I'd give you a quick update and show you what I did. So Thursday was dollar yen long trade and based on. So here we are, Thursday morning. Let's have a look. Drag the trade onto the chart. There it is there. Just sort of waking up with the with my natural rhythm, as it were. So not setting any alarms. If I miss the trade, I miss the trade. That's all there is to it. But woke up perfectly fine. Could see before 5:30 actually. Can see there is some sort of resistance here. But we are in an uptrend, low, high, higher, low, and a higher high made prior to me waking up and taking the trade. So, as always, what we're trying to do is enter a swing trade using a swing trend, using a candlestick trend. I hope that's clear by now. So, there's the low, the high, the higher low, and the higher high. So we've also got a pullback to test some sort of resistance broken as support, and then the price continued, and as you can see, it continued further than my 9 pips net of spread. But I don't want to be in all this toing and froing. It would have actually gone into negative here if I'd stayed in the trade and then finally continued. But I don't personally want to be involved in trading when the big boys are at it. Maybe in the future I'll change my strategy, but at the moment all I want to do is just increase my account on a daily basis with the minimum amount of involvement in the market and a minimum amount of stress. Suits me, and it may not suit you, of course. But we can clearly see if we join the lows and the higher lows that make higher highs. So this is a higher low here that made a higher high here. In other words, it broke that previous high. That is an uptrend. So I want to be going long, and that's what I did. If we look at the alerts, then we had an H1 early on. We'd had an M30, but that actually didn't occur until after my entry. I used the M15 as the alert, and you can clearly see the alert happen there. Entered the trade, had a little bit of drawdown, but I'm committed to that move now, and a safe stop would have been below there. Although in this instance, I was watching it and would have just got myself out had it started looking dangerously short, dangerously to the opposite direction. And the trade took me out, and another winning trade. So going back to the trend analysis, here's the swing I was talking about: low, high, high, low, higher, high, and so on and so forth. Now, what I didn't do, or what we can do, because I talk about these candlestick trends as well. If we go up to the H4, you'll see that this is just now a H4 candlestick trend with the low, the high, the higher low, and higher high. Two green candles making higher lows and higher highs is just what we're entering on the M15 in reality, to get back into that trend. So I hope that is starting to become clear now. We're using the lower time frame trends, if you like, to enter the higher time frame trends. So there's the trend going up, and then if we look at the internals of this small move here, in fact, prior to me entering. So we want to go down to the 5 minute and look at that, and you'll see there will be a trend in place there, and there it is: low, high, higher, low. We've broken the higher high there with this. That's the uptrend I'm talking about. That's the move I'm talking about there, a trend within a trend. That's what I want to be trading. I don't know how to make it much more simple than that. and obviously the alerts are what are helping us get in on the trade. So that's that trade. It's also worth noting as well that there is we can actually draw on the chart the downtrend that was happening, or a number of downtrends. Remember, it's lower highs forcing lower lows, forcing the price down, that we join together. So that was a lower low here. It's only marginal, but it was a lower low, and you will see that clearly actually with the line chart. That's why I like to use the line charts. So we could join this, and we always go for the latest one that's created the lower low. Obviously, had this not formed, then we'd have a line down here as well. So you can see some people draw the fans. You know, you can draw fans automatically. I'm not sure what we need to use for that, but you generally find what you invent yourself, if you like, has been invented by someone else and traded by someone else long before we got involved in this. So we can clearly see there's a massive downward. Oh, my mouse has just stopped by a break of the trend line. So it's broken through here, and then collapsed down again, and then it's broken through here and finally started to move up, as you can see. The other thing to note is that it's just a break just happened, a trend through these lines. We're entering at the lowest point. The reason I say this is because EJ is the EJ trade on Friday was virtually the polar opposite of this, because and also we could have traded UJ actually, but I chose EJ short on Friday. And if we look at the chart on the H1, it's almost identical to the dollar yen, but insofar that we're now actually in the opposite direction. We don't have an opportunity to trade any trend lines where we've just crossed the trend line, if you like. Let's have a look at yeah, there's the connecting the lower highs that create lower lows. Lower high broke the low of that, created a lower low, and so on and so forth. We'd want to be entering somewhere around here, and remember this is an H4. On H1 it looks a lot more sensible. You're far away from entering just off of a trendline break, which would be a moving average crossover as well, which on the H4 would show you some sort of crossover alert there. You always want to be trading close to that alert, remember. So getting back to the actual chart, what do I know about this? Well, looking at the chart, I've got all sorts of problems where I am here, where I'm about to enter. Look at H1, I'll mark up the sort of level that I'm talking about entering the market. In other words, time I'm entering the market. And we can clearly see we're at some sort of interesting support and resistance level. There's an H4 high there. It's good resistance because it's actually created a big H4 red candle, and we've just touched it prior to me considering my entry. We've also got all of this support becomes resistance type stuff going on here. They've pushed down, couldn't break through, pushed down, couldn't break through. I mean, they didn't close through. You've got these wicks here, and same has gone on here. So massive area of support. Act strong support sends the price up for hours and hours and hours, in fact days. Not so strong at that point, again not so strong at that point. So buyers are running out of momentum, if you like, strength, and we can clearly see once it's broken through it's collapsed. So it's fair to assume, providing you get the right alerts and indicators that we use to trade, that the price is likely to take a dive. And as you can see, all day Friday it just collapsed from those levels. So drag and drop my actual trade onto the chart. And if we look at M15, show you what actually happened. Well, we can go to M30 and draw an ascending. Could have been on any time frame, to be honest with you, but joining up the higher lows that make higher highs. This is a higher low that broke through there, made a higher high. This is a higher low that broke through there, made a higher high. So we're happy to join all these up together. We can also do the fan, as I mentioned in the other chart, which continues to connect higher lows that make higher highs, and so on and so forth. And as you can see, then once the price has broken through these levels, as you can see, that's why I like to use the close of the candles, because we could have, if we'd have drawn, and I'm not making this sort of fit the purpose, but if we'd only drawn them on the wicks of the candles, then that would have been sort of caused us to wait until until the big boys started to play in the market, to be honest with you. So you do your own research on that. I like to join the again here, this would have been a false sort of reading on the ascending trend line there. You've connected, but in my opinion it's far too late. This one's got us in earlier. It's not like I've curve fitted the lines. You saw me draw them on there. It is just how I like to do my ascending and descending trend lines. Always connect the close of the chart on the line chart, and I think you do get a more accurate idea of what's going on. I suppose it's just like using linear weighted or smooth moving averages. They do all give a different reading. So M15 alert to the downside, which happened there, and it happened there, and a little pullback. That was the actual M15 alert candle there. Little pullback, and then hit the trade. Close it just a couple of pips before the big number there. That's just my habit, as I've said many times on here, because you tend to get some sort of playing around on those numbers, and that was a big one as well, 121. So all the more reason to expect it to possibly reverse to the long side or bounce strongly. It didn't do either. It broke through it nicely, came back to test it again, and then continued on down, and another 75 odd pips could have been grabbed. So that could have been an 85 pip trade, that one, if you teach yourself how to manage your trades better than I do, possibly, or definitely. You would have far more on the plate. Much the same as the UJ long managed to move another 100 or so pips away from my take profit. Sorry for the, there we go there. I got out there, and then you've got 25 or 20, 25, so it's 45 and another 50, 95 and another 50 until it sort of turned round. So 145 pips could have been grabbed on that one. So trend trading, support and resistance, using the alerts for the entries, and that's the last two trades of last week. Thank you for watching, and have a great day.